Welcome to Trading Lounge and the European indices for the 4th of March, and starting with the DAX on the weekly chart here, we've either got a triangle pattern or we've got a flat. So with the triangle pattern, it is like it is here in terms of an A and a B, 3 waves here for the C wave, 3 for the D and 3 for the E for 4, and then up that way. The flat correction would see 5 waves to the downside and would probably be an expanded flat because we've taken out the high here. So we will take out the low here. So in that case, we would look for 5 waves down through here further for the flat correction in 5 waves rather than 3 waves. So we just really need to take things step by step and trade what we know and see and stay with the evidence. So on that basis, we can move into, let's just move in here a little bit. So with a flat correction, would be looking for 5 waves down, which would take us down to, say, the 10,000. But let's just stay within this trend here for the time being. So I'll go to the 4-hour chart. So this is one way to look at this particular move to the downside here. So that would bring us one more move to the downside here. And I kind of like this one. It's a little bit sort of odd in that we've got this whole first wave being quite long here and the third wave being smaller, and then the 5th wave will also be smaller as well. So this is a real possibility here. But if we line up our move down with the S&P 500, well, then we need to look at this as already having 5 waves down through here, and probably let's go to the hourly chart first. So it would count down like this here, which would be wave 1 to here, 2 to here, and all the way for 3 and 4 here, and then 1 and 2 and 3 and 4 and 5 here for this. This low here was lower than these other lows here, but on the FTSE it was higher. So the FTSE could be counted a little bit differently. But in this case here would be the same as the S&P, where we're looking for an impulse wave to the upside here, wave B to come in, and then wave C here. I mean, technically we're looking for a 61.8% from the high to the low here, but also equality as well. So equality between wave A and wave C here. So if this market is going to bounce, there can be a little move down here, and then we'd be looking for 5 waves to the upside here for wave C, which would have some sort of equality to the length of wave A here on the 15-minute chart. Here for a little more, there's not much more detail here, but I mean, if you're still short from up in these these 4 positions up here, then we didn't want to get stopped out by these. You may have been stopped out, but I'm bringing the stop down to this level here. So if 12,000 found support, then we'll be going up from that point there. This little move coming in through here, if we have a look at that as a B wave on the tick chart, we could look at it like this. So the A wave down to here, the B wave to here, and then the C wave, which would be 1, 2, 3, 4, and 5 down to here. So even though it's pulled back down past the 61.8%, we can still get one more move down in through here. So we would only go long if the 12,000 became the support. Okay, that's one way of looking at it. Another way to look at it too, if you're keen to go onto the long side, would be going long above this high here. Okay, so the FTSE's been more bearish for longer, so it's in a different pattern and a more bearish pattern as well. So with this market here, we can look at this as wave 1 here and wave 2 here, and then 5 waves down here for wave 3. We're looking for wave 4 to pull back the other day. This can also be wave 2 up here, this wave B as well, but I won't go into that now. 4-hour chart. So I'll just go to the one. So this waveform may be completed, or if we're going to get a rally in the S&P, it will get a bit more complicated, but let's just go into the hourly chart and pick that up from here. So 38.2% was which we were looking for. So, and this low here was lower on the DAX, but not lower here. So in this case, we can look at this as an A and a B and a C wave here. Let me just, don't think I've got any others. Hang on a sec. Okay, it wasn't magic. I was just paused and put these ABCs in here. So this is why wave 4 is a bit complicated. I mean, technically we can look at all of this and go ABC here and wave 4 here. Done and dusted, nice. But the other side to this too is that it could, if the S&P does rally off the 3,000 and find support, and the same with the DAX doing its thing, then we would look at this here as wave C to come over here, wave A here, and wave B to play out here. So that's possible here as well. More complicated, an ABC for the A wave, a B wave, and a C wave coming in here and then dropping. That's the problem with this here. But there's nothing I can sort of do or say at this particular point here. I mean, the B wave would pull back 61.8%, but look, it may pull back 70 or 80%. You know, it may even come down and touch. I mean, B waves are also known to take out the low here and then push up, you know, so this is why wave 4s are complicated. So you need to trade smaller degrees of structure if you're if you're trading in there. So I'll just put this here as also completed here, but if this is going to move down, it would be down. It'll be a rough ride coming. It's got to get through the 6.5, and then the 6.3 we're going to see bounces here, and the 6.2 is powerful as well, because in terms of price ratio, this is 61.8%, 62%. So that would also look there for a low in this case. But I don't know how this dance of this wave 4 is going to play out, if it's already completed here, or it's going to get uglier. So I just don't know. Alrighty, I'm going to leave it at that. Thanks for tuning in. Cheers.